Hello, everyone. Welcome to our event today, Amazon Aggregators with CEO Ryan Gnesin. Um, so it's already a bit past 4, so if you guys could all turn on your videos, that would be great, and we'll get started.
Nice to meet everybody.
Yeah, so this guest speaker event is brought to you by StreetFins. As you guys probably all know, we're an organization dedicated to solving financial illiteracy. We focus on high schoolers and college students, so really just helping the future get ready for all the financial needs that they'll have, right? So understanding what goes on, how money works, how to invest, just being smart with your money. So you can check us out at streetfins.com. That's where we post our videos, articles, any information about us you can find on the website. At streetfins on Instagram, we post Instagram posts. You can learn all about different parts of finance and see what events are coming up soon. If we have any competitions, that'll be on there. So basically, just more information on our Instagram, and of course the Finance Simplified podcast by Rohan Gupta. He's been doing it for a long time with a bunch of great, very esteemed speakers. So it's just a great way to learn more about different fields of finance, right? And you can also join our Discord at tinyurl.com/streetfins-club connect. This is a community of over 200 high school students with similar interests. So if you want to, discuss with them, talk about anything you're interested in related to finance, stocks, investing, crypto is a huge topic now. So, just to learn more and speak with people who share the same interests, you should check out the Discord server as well. So without further ado, I'd like to introduce our speaker today. Hi, Mr. Neeson. How are you?
Hi, hi Raul. Great to meet you, and great to meet everybody who's listening. Thanks for joining, guys. Out of interest, where is everyone located? Just curious. More or less. I mean, is it all in the US, or are we all over the world? I'm just curious where everyone is at the moment.
Yeah, so
Massachusetts.
Massachusetts. I see California in the chat. So yeah, StreetFins is our club network is mostly spread across the country, right? So it's within the US, but it should be pretty well distributed, across all parts of.
Okay, awesome. Well, I'm in Austin, Texas, so it's great to meet all of you guys, and great to be chatting with you.
All right. And like I mentioned before, it would be great, just out of respect for our speaker, if you guys could turn on your video to show that, you are engaged in paying attention. We understand completely if there are any, technical difficulties or you're not able to, but if you can, then it would be great to have the video on. So with that being said, would you be able to kick us off by, giving a brief introduction of, your background, what you do, and the business?
Yeah, absolutely, guys. My name's Ryan Gnesin. I've got a kind of mixed mongrel accent, which people are always curious about. I grew up in South Africa, and I left there when I was 14 and then moved to Sydney, Australia. I lived there for 10 years. And then I spent a little bit of time, about a year in Switzerland, working at Glencore, which is one of the largest commodity traders in the world. And with that company, they asked me to move down to Indonesia. So I was in Indonesia for 8 years. Essentially buying physical commodities from the Indonesians, selling it to the rest of the world. And then middle of 2016, I moved to the US. I moved to New York City. I lived there for 5 years, got married, started the business. And then my wife and I, just a few months ago, moved to Austin, Texas. So there's good barbecue out here, and zero state income taxes, which is always a big plus. So that's a little bit of the background. And the business that I started has evolved somewhat over the last few years. It started out in the end of 2016. I was fascinated by this e-commerce thing, right? And Amazon in particular. Now, you guys must realize I never actually bought anything on Amazon until I moved to the US, because you don't have Amazon at the time. You didn't have Amazon in Indonesia or Switzerland or Australia. So I never actually bought anything on Amazon. I came to the US and I went, whoa, this is super cool and super efficient and like pretty awesome. So I said, I like the idea of building a business on Amazon. And I had found several friends at the time. I bumped into people arbitrarily, randomly, who were running these small Amazon businesses. And when I say small, like $5 or $10 million of revenue, but they were running it by themselves with like 3 people in the Philippines. And I was like, whoa, that's like super interesting that you could build a business like that with such a small team and build a really successful business. So I started looking into it and decided to just test on a very small scale. So I tested with selling a few shoes and a few different things. And I mean, I can go into more detail about reselling branded footwear and apparel, but eventually the business evolved into buying brands. And today we're one of the largest Amazon aggregators where we actually buy other businesses. So we're buying roughly 3 or 4 brands per month. And we essentially have a team of 150 people. And once we buy the Amazon business, we then essentially implement best practice in order to grow and scale those businesses. So we have a portfolio of brands and an M&A machine that buys them. And that's kind of where we are in a nutshell, right?
Yeah, I think that was a great introduction to our topic today. So, building off of that, would you be able to tell us about kind of where this concept came from, how long it's been around?
Yeah. I tell you guys, I've always liked the idea of buying businesses instead of starting it. Most people start businesses, but I used to have this business mentor named Keith Cunningham, and you can find him online. There's a bunch of stuff on YouTube. He's written a few books, Keith Cunningham, and he has a course that he teaches on how to buy or sell a business. And I was curious one day, and I went to check out the seminar, and he made a strong argument that the risk reward profile of buying a business is much stronger than starting a business, because most businesses that get started on fail, right? It's like 50% of new businesses fail in the first year, 80% fail in the first 5 years, and 96% of all new businesses have failed within 10 years. And of the 4 that are still successful, with like the 4 that are still surviving, it doesn't mean they're successful, it just means like they're surviving. It doesn't mean they're making like tremendous amounts of money. And so he made the argument that starting a business is very risky, but buying a business, if it's already operating, is actually a lot less risky, right? Of course, you got to go raise the capital to do that, but you can essentially jump in. It's like an airplane. It's already cruising at 30,000 feet. You just jump in the co-pilot seat. The pilot shows you how to drive it, and then you switch seats. And then eventually you take over. And like, that's kind of what it's like buying a business. So I always like this idea of buying businesses. But initially when I started the business, I was just reselling branded footwear and apparel, but I always had an eye towards buying some of these Amazon brands. Now, the problem was until 2018, so before that, Amazon had weird rules in place that prevented you from buying a brand on Amazon and then converting it like into your own name. Right? So like you would buy a brand and then you would have to change the company details and switch the bank account. And oftentimes Amazon shut down the brand if you try to do that. Well, in 2018, those rules changed. And so this business model of buying and rolling up, they call it a roll up, right? Where you're acquiring and putting together different brands. This idea of rolling up Amazon brands was actually not possible until 2018. And since then, the model has slowly started picking up traction. And then, of course, in 2020, the model, it really just exploded because of the pandemic. There's been a couple of very big success points. So one of the companies in the industry got to $1 billion valuation, and they were the fastest ever profitable unicorn in US history. So all of a sudden, investors started paying a lot of attention, and plus the pandemic. And so, it became attractive to investors. And then, if you're buying Amazon businesses, it's very capital intensive. You got to spend a lot of money to buy these businesses. You're paying sometimes millions of dollars for these businesses. So you got to raise a lot of money beforehand. And so it helps that investors are really eager and interested to invest in the space. And so, yeah, that's how we started. It started slowly by first reselling other brands. So I'll tell you guys, I literally, and like any one of you could do this, right? The way I started was I would go into like a Nike outlet store, right? And Nike has like friends and family days where they give like a 25% discount. So I'd go to like a Nike outlet store in New Jersey. You guys have them, I'm sure, where you live or nearby. And so like you can buy these shoes really cheap. Now it's a pair of Nike shoes, and if you can buy it at a big discount, you're always going to be able to resell that, right, online. Like, you're not going to, like, the risk reward profile is pretty good, because the downside is if I have to sell the shoes, maybe I'll lose $5, right? If I buy a pair of shoes that retails for $100 and the Nike outlet store is selling it, let's say for $60. And then there's a special friends and family day with another 20% discount, and I'm buying it for $48 as an example. Well, you know I can buy that, and then, like, worst case scenario, I can sell it on eBay, or I can sell it online. Like, maybe I'll lose a few dollars, but if I get a good price, I can sell it for $70 or $80, and then you can still make a really good profit. So I literally went and bought a handful of shoes, and I put them up on Amazon, and boom, they sold, like, within a few weeks with a really strong profit margin. And I went, okay, cool. So then I rented a truck, and I went to the next Nike Friends and Family Day and literally bought like $10,000 worth of these shoes. And I put them up on Amazon, and boom, they sold within like 3 months at like a really strong profit margin. And then I tested out with shoes and toys, and I tested a few different things. And eventually, like, the business started working. And so I went and I found a private investor who lent me more money, right? And so I could then buy more inventory. And slowly but surely, like, we started building a bigger and bigger business. And then eventually I had enough credibility where I could go to someone and say, hey, look, I like the idea of buying these Amazon businesses. You know, let's test one. So we bought a really tiny Amazon business. Like, the first one we bought was cost us $250,000, right? Which is relatively small. And now we're buying businesses that are up to like $30 to $40 million. So, like, the businesses are getting much, much bigger. But we started small. And I'm always a believer that, you know, you start small, you get wins, and then you double down on your success. And a lot of things I tried didn't work. And so I, you know, like, if it wasn't working, cool, kill that idea, like, focus on the next thing until you see something that works, and then you just get momentum and double down on your success. So that's how it all happened.
Nice. That's pretty inspirational. So the next question is, how do brands actually benefit when they partner with Elevate Brands or any Amazon aggregator?
Yeah. So most of the time, they sell to us outright. So most of the time, the seller sells to us, pay them a big chunk of money, and then they go and sit on a beach for a little while or have a party or whatever, right? Now, a lot of those sellers go and start another Amazon business, right? Because if you just paid someone $1 million, let's say, well, they can take $100,000, put it in the bank account, or maybe they'll take $100,000, put it in the bank account, put another $500,000 into a property, and then they've got another, let's call it $400,000, and they use that to invest in another Amazon business and then grow the next one. So we bought a business the other day from a seller, and it was their 5th Amazon exit. They've literally sold 5 Amazon businesses, and each one was bigger than the next. They sell it, put the money into another business, sell, grow it, and they've grown 5. And the latest one was like $15 million sale. So, like, they're super rich now, right? You know, and so, like, that's how they benefit. Now, sometimes a seller comes to us and says, listen, guys, I don't want to sell my business. Like, I'm having fun, I'm having a good time, I'm enjoying it, I believe in it, but I want to de-risk, take a few chips off the table, and I'd like you guys to come in and help us, like, grow it even further. Because they say, we're pretty good with, like, creative and marketing, but we're really bad with the supply chain, and we're really bad with other parts of the business. So why don't we partner with you guys? And so that's what we do. We'll come in, we'll say, cool, we'll own 50% of the company, we're business partners, we'll grow, we'll put our best team and our best resources to grow the business. And then they get to take some money off the table, which they can have some security, buy a house, whatever it is, and then they still have another 50%, which they can let ride and hopefully get some big upside.
So, you know, building off of that question, when one company comes to you and, you know, asks for help with growing, do you look within your existing portfolio and kind of see what you can share with other companies, or is it, you know, a unique approach for every company with no overlap with the others?
Yeah, you know, I would say, you know, the analogy, like, whether you're selling shoes or sugar on Amazon, like 70% it's the same. You know what I mean? Like you got to make nice images and a nice video, and you've got to do the Amazon advertising, which they call PPC. You got to do that really well, and you've got to understand how the back end keywords work, and how to optimize the title and all that stuff, right? So, like, 70% of selling shoes is the same as selling sugar, right? And any other category you can think of. And then the other 30%, there's a little bit of nuance and difference, a little bit of nuance and difference. So yeah, so like we certainly have some overlap in terms of the skill set. And then sometimes you just have a category expert. So like, for example, when we bought a business in the beach tent category recently, right? So like the person who was managing it has also got experience in like in that outdoor sports and outdoor category and even camping, right? So like they have some industry specific expertise, but they also have a lot of general expertise as it relates to how to grow a business on Amazon.
That makes sense. So when you partner with these companies, instead of buying them outright, you're just helping them, partnering with them. How exactly does Elevate Brands make money from this partnership? Is it through
Yeah,
like the value of the stake increasing, or is it like a portion of the revenue?
there's two primary ways that we benefit. One, if we buy a business that's doing $1 million in profit, right? And we can grow that to, let's say, $2 million in profit. Well, we've made, like, there's one benefit there, right? And then the other way is, the law of scale here applies. So when we buy businesses, typically we'll buy it for what's called a 4 to 5 times multiple. So let's just keep it simple. If the business is doing $1 million of profit, we will pay the multiple, which is like the market price, right? The multiple might be 5x, which means 5 times the profit. So we'll pay, in that case, a business doing $1 million of profit, we'll pay 5 times that, $5 million for the business, right? Now, if you buy 20 of these businesses, okay, and you put them all together, the market values the whole portfolio not at 5 times, but at 15 times. So you call that a multiple arbitrage, right? So in other words, if I bought 10 businesses, each doing $1 million, and I paid 5 times for each one, that would be 5 million times 10, that would be $50 million that I had to pay for the businesses. But if I put them all together and now you get the arbitrage, now that whole portfolio, the market will value that at $150 million. So I've just essentially made $100 million arbitrage, right? And that's how like scale business. And the reason for that is that bigger businesses have a far lower chance of failure than a small business. A small business, 1 or 2 things can kill the business. Whereas because we have this large diversified portfolio, it's unlikely that any one thing can kill the business, right? Because you've got such diversification. At the same time, you also start to build real strong in-house expertise where I can have world-class branding people and world-class supply chain people and world-class marketing people. And so like we should be able to then get incremental growth out of those businesses so that we have long-term success. And so therefore the market pays us a higher multiple. And it also has to do with the fact that we're growing very quickly. So that's where the 2 primary benefits of buying these businesses come from.
I see. Okay. So the next question is, what does Elevate Brands look for when they're acquiring a business?
Yeah, the most important thing is a good product, right? So, if you have a crappy product, no matter how great my marketing team is, right? And no matter how good the supply chain team is, like that business is unlikely is going to be successful, maybe in the short term, but long term, no. So the first thing we look for is a really, really great product. And how do you know it's a great product? Well, like you can often see from the reviews. Well, what if the reviews are fake? Okay, well, we have ways to like assess whether we think the reviews are fake or not, right? And it's hard to know 100% with 100% certainty, but we're pretty good at knowing whether someone's got fake reviews. And by the way, Amazon's got really good at shutting down businesses that are getting fake reviews, right? They're getting much better at that. So ultimately a good product. And then the second thing is, if I boil it down, it's about how much we think we can grow the business, right? So when we're looking, we're saying, okay, does this business have really good creative or not? Well, we can improve the creative. Is the business selling in Amazon Europe or just Amazon USA? No, they're not selling in Europe. Great. That's another avenue we can grow the business. Are they selling on Shopify? No, not Shopify. Cool. We can probably, maybe not for every business, but yep, there's an opportunity to grow this business on Shopify. Or when I say Shopify, like direct to consumer, right? Like selling it on our own website. So we just look for like ways to grow the business. And if we think there's an opportunity to really grow it, and it's a great product, In a nutshell, that's what we look for when we buy businesses. Pretty simple, right?
Yeah, it's pretty intuitive. So from the seller's point of view, then what makes one Amazon aggregator better than another?
You know, um, I always say it's not what you do, it's how you do it. Okay. So there's a lot of people who own restaurants in the world. Yet somehow McDonald's built this massive empire when there's millions of other restaurants. Well, why did McDonald's build an empire? Because it's not what you do, it's how you do it, right? It's not, and is it because their French fries are so good? Like, yeah, their French fries are pretty good. Their burgers are not so good, but like, what did they do? So that, you know, in every industry, you can pick any product or service in the world, whether it's selling hamburgers or cutting hair or selling things on Amazon. You can find a lot of people that have made a lot of money and a whole lot of people that made no money or went bankrupt doing that, right? With the same exact strategy and the same exact business model, because it's not what you do, it's how you do it. And so, you know, in our case, being really good operators. So like anyone can go buy an Amazon business. Like you can go raise money. If you can go raise money, you can go buy an Amazon business, right? Now, the question is, did you buy the right business? And can you grow the business after you owned it, right? And we have really, really strong people on our teams in all the different areas. So I'll give you like a practical example. So let's, like, everybody knows that you need a really nice hero image. Like when you go on Amazon, you want a nice photo, right? Simple. Well, and now let's just say that we have a tactic to improve the quality of the photo. Well, what does that mean? Improve the quality of the photo. So let's say I take my competitor's image and my image and I put them to a poll and we get 100 votes and 55 votes are for my image and 45 votes are for my competitor's image, right? Well, for some companies, maybe that's good enough. And for some other companies, they say, no, not good enough. Let's keep trying until we get 90% for us and 10% for them. And maybe one company has a higher standard and another company has a lower standard, right? And maybe that's and if you apply that standard across hundreds and hundreds of different growth levers, from that to the video, to the marketing, to the channel, if you just have a higher standard and a higher ability to execute on that, because it's like, it sounds simple, but when you're doing this at scale, well, you need great people. If you want to have that 90 versus 10, you need much better people. You need better designers. Well, how do you get better designers? Well, now you need to attract them. You need to sell. You need to convince them to join your company, right? And so there's like each of these things, as I say, it's not what you do, it's how you do it. There's a lot of little operational things that have to be done well in order to get overall success. And as I said at the beginning of the call, large successes in life and in business are nothing but the accumulation of thousands and thousands of tiny little micro successes, right? So whether it's an image being 90 versus 10 or 45 versus 55, like that's the micro differences that accumulate on top of each other that create big success. When you see someone who's made $1 billion, right? It wasn't one thing that they did. It was years and years and years of tiny little things, getting up earlier in the morning, maybe working out, eating a little bit healthier, you know, not going to the party, reading more books, talking to more people, hustling a little bit harder. You know, it's lots of tiny, tiny micro successes stacked on top of each other that create long-term success.
Okay, yeah, that makes sense as well. So, you know, looking at this overall, you just mentioned how, you know, a company in your sector hit, I think you said $1 billion valuation.
Yep.
Yeah.
Well,
So,
they're now valued at $6 billion, actually.
okay,
that was last year.
that's quick growth. So, do you see this as a new form of venture capital investing? Do you think that's where kind of the interest is coming from?
Well, yeah, I mean, investors, you know, at the moment, you know, the government's printing a lot of money at the moment. I don't know if you guys, you know, you guys probably are aware of this, right? The government, so that money tends to find its way into the hands of like venture capital people and private equity investors. So they have a lot of equity to invest. And so the question for them is, where do they put the money, right? And what's been very clear, especially from the pandemic, is how e-commerce has really accelerated. And so, you know, if you look 20 years ago, if you wanted to build a brand and sell your brand 20 years ago, well, how did you do that? Well, there was only a handful of places you could sell it. Maybe, and typically it was brick and mortar, and you had to be on the shelf of, let's say, Target or Walmart or Best Buy or Bed Bath and Beyond or whatever, right? You had to be on the shelf. Well, that created an opportunity for only a very small number of brands to exist because there's limited shelf space. I mean, you can only fit so many brands on the shelves. What Amazon did and what e-commerce has done is there's unlimited shelf space. You know, there's no reason you can't have 1 million brands or 10 million brands selling on Amazon. Why not? I mean, and there are literally millions of products selling on Amazon. Well, investors now realize that that is the future of retail. There's still room for brick and mortar. People are still going to go into stores, but more and more people are buying e-commerce, and the pandemic accelerated that trend, right? It went from like 15% of retail to like over 20%. So it accelerated the trend. And so investors are saying, well, if I have all this capital to deploy, where should I put it? Should I spend it on a new brick and mortar store who wants to grow, or should I put it into an e-commerce business? And because our business is focused on e-commerce, and because this is kind of where the future is, investors tend to want to put their money into things that are going to have long-term and longevity and long-term success.
That makes sense too. I also had another question kind of similar to the whole venture capital line. You know, do you see Amazon aggregators as a new form of venture capital investors themselves, you know, investing in small private businesses and helping them grow?
It's a good question. Here's what I'll say. There's an expression I like, and it says this: you can do anything you want, but you can't do everything. Okay, so anything you want to do, you can pick it, and you can be the best you can try to become the best in the world, and you can pick whatever you want, but you can't do that and a million other things well. Not possible. You got to focus, right? And focus is one of the most important things for long-term business success. There are so many entrepreneurs who start one thing and then lose focus and then try something else and try something else and try something else, and then they never give anything a chance to be successful because they get too distracted. We call that the shiny penny syndrome. So the answer to your question is, we are focused on our current business model, which is buying businesses on Amazon and then growing them on Amazon and then slowly starting to take them off Amazon. And so if you're saying to me, well, what about if you find a really great business doing direct to consumer on Shopify, right? Like, why don't you go buy that business? Well, over time, maybe we will, right? So like Amazon, for example, Amazon sells everything today, but when they started, they were the best in the world at selling books. And then from there, they slowly started moving into other categories, right? And then they started doing other businesses like AWS, and they started opening brick and mortar stores, but that happened over many, many years. Our business is still relatively young. And if we get too distracted too early and we lose focus, that can be detrimental to the company. So the strategy is focus, get really, really good. And once we have that machine, like a well-oiled machine working, then we start to look at other strategies like buying a Shopify store, or maybe, who knows, maybe open a brick and mortar store one day. Who knows? So the answer to your question is it is totally possible. You know, our strategy is to be quite focused, but it's certainly possible that we allocate a fund sometime over the next 2 years and say, we have a fund and we're going to invest in really interesting business ideas that are not Amazon specific, but they're related to Amazon, and maybe we'll do that. So yeah, it's a question of focus, and it's a question of doing it at the right time.
So speaking of expansion, do you see any emerging trends in the industry, not just specific to your company, but you know, overall across the majority of Amazon aggregators?
There are so many emerging trends. You know, I mean, there's so many trends. I mean, you know, the growth of e-commerce is a trend. The increase in logistic costs because of COVID is a trend. You know, there are some categories that are doing better than others. So for example, like anything related to the home and garden, well, that's growing. That's a trend that's growing because a lot of people are moving out of cities. I mean, I moved out of New York. I was living in New York, moved to Austin. And like a lot of people are moving out of cities and into houses. And so like you guys probably know that the housing market prices have gone crazy. And so like those categories have done well. You know, and some trends are short-term and some are long-term. So like during COVID, when I say we're still kind of during COVID, but I mean during peak COVID, kind of middle end of last year, exercise equipment was hard to come by because because all the gyms were closed, everyone was buying exercise equipment and for their houses, like dumbbells and skipping ropes and stuff like that. Well, that trend went like crazy. And, like if you try to find a skipping rope on Amazon, 9 months ago, it was difficult to find. Like there was a shortage of supply. So that was a great area to be in. Whereas like now that started to fall over again because the gyms are opening up. So some trends are short term, some are longer term. There's plenty of them. There's plenty of trends out there. Yep.
So where do you see this business overall going in the next few years? Because, right now, of course, e-commerce is huge, but as we go back to normal or whatever the new normal is going to be, and the years in the future, do you still think that, Amazon and other e-commerce retailers will have an equally large role in our lives as they have today?
I do believe that, right? I mean, like if you were to ask everyone on this call, how many people bought more stuff on Amazon this year versus last year, right? I'm guessing most people would say me. And how many bought more in 2020 than you did in 2019? I'm guessing most people would say me. And how many people more 2019 versus 2018? So like there is this strong trend of more people buying more stuff on Amazon and e-commerce. And that, habits form and that behavior is slow to change, right? Like why would I go, like if I wanted to buy a new toothbrush, well, like I got to get in my car, I got to go to the store, I got to buy it, I got to wait at the cashier, I got to get the money out of my wallet, or I could just go on Amazon, click, 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 5 minutes later, boom, I got a toothbrush, right? And you can apply that to a new pair of sneakers or a bunch of, or almost anything. So I think that trend is here to stay. How quickly it grows is the only question, but I don't think that's going to change. And I think e-commerce is a long-term trend that isn't going anywhere. And Amazon continues to dominate. Now, look, Amazon is about 9 times bigger than Walmart.com, right? Now, not a lot of, I'm guessing many of you guys on this call, don't shop at Walmart.com, but you do on Amazon, right? Well, Amazon's 9 times bigger than Walmart.com, but Walmart happens to be really strong in grocery. But Walmart is also growing at 5 times faster than Amazon. So over time, Walmart might start to catch them. Right, and Target is number 3, also going to start, and then there's eBay, and then there's Bed Bath & Beyond, and so all of these other guys are trying to get market share and trying to compete. But the overall but from our point of view, we're very happy to sell on Amazon, but we're also happy to sell on Walmart or Target. We don't mind wherever the customers are, that's where we'll sell, right? And but we also can't sell in too many channels because then we lose focus, and then it becomes more complex to manage. So yeah, I mean that trend is not going anywhere, and I don't think it's going to change. And I think you'll probably see more and more of these micro brands, start up. And I would encourage some of you guys to start your own Amazon side hustle, and you can start with a pair of shoes and see how that evolves, right? And you can start learning entrepreneurship and start small, and hopefully one day get pretty big.
All right, so that brings us to the end of the questions from us as Streetfins. So now I'd like to offer our audience the chance to ask any questions that they might have. I know that some of our members here had questions that they either submitted online or in the chat. So I think we can start with Anais. If you'd like to ask your question, you can go ahead.
Oh, hi. Am I coming up or am I good?
Oh, okay. You're perfect.
Okay, sounds good. So my question was, how would you say e-commerce has affected consumer behavior, especially during the pandemic? Like, for example, Amazon purchasing Whole Foods. How do you think that has inclined on e-consumer rate a lot?
Yeah, look, what I'll say about Amazon is they are famous for innovating, right? So Jeff Bezos, he's no longer there, right, full time, but he stepped down as CEO, right? But he's instilled some strong principles, and one of the principles he's instilled in Amazon is he calls it always day one. It's always we're the world's largest startup. He's what he likes to say, and so they're always innovating and experimenting. Now, when you experiment with something, you don't know if it's going to work. right? And they could be massive experiments. And as the company gets bigger, the experiments get bigger. And so they've had huge failures, like the Amazon Firestone. I don't know if you guys ever remember that. They tried to get into like the phone business, and that was a massive failure, and they lost billions of dollars. Whole Foods was another experiment. Let's buy a brick and mortar grocery chain, and let's see what happens. And so I think it was a good experiment because grocery is one of the fastest growing segments of online buying, right? Like 5 years ago, very few people were buying groceries online. Today, a lot of people are starting to buy grocery online. So that when you talk about consumer behavior, like that's an important trend that Amazon has noticed. Now, from Amazon's point of view, they've been sitting there thinking, well, how do we get better at this? Well, one thing we can do is we can go buy this brick and mortar store, Whole Foods, which is really cool. And by the way, health and wellness is trending. So you've got two trends there. You've got health and wellness trending, which Whole Foods caters to, and you've got e-commerce trending. And so from Amazon's perspective, they go, that's a pretty interesting business to buy because we can rely on Whole Foods to help us in our online grocery business. And we're riding this trend. And we think brick and mortar isn't going anywhere. And so, it's interesting. Most companies are going away from brick and mortar to e-commerce, and Amazon's experimenting with e-commerce going into brick and mortar, right? So, and I think the logic there is brick and mortar is not going away. I mean, people are still going to want to buy stuff in stores, but they're also going to want to buy stuff online. And so if we can do both and cater to both, we can attract more customers. And when we own the customer, when we have more customers, then we can remarket to them and offer them additional products and services, right? On top of the initial product, and that gets them even more entrenched in our business model, and we make even more money that way. So I think that was an interesting example you gave, yeah, I mean, consumer behavior for sure has evolved to be buying more stuff online than they did before the pandemic. That's clear. Yeah.
Thank you so much.
Yeah, no worries. Good question.
Next, we had a question from Rohil.
So does Amazon use any techniques to prevent Amazon aggregators from acquiring companies that sell on the platform? Because I can imagine that Amazon doesn't like it when the revenue goes off their platform.
Sorry, can you ask the question again? I missed you the first part of the question. Could you ask it again?
Does Amazon use any techniques to prevent the aggregator companies from acquiring companies that sell on the platform?
Okay, so great question. So Amazon loves the aggregators, right? However, they don't want us or anyone taking their customer off of Amazon, right? So let me answer both of those questions. One is the reason they like us is because when we buy a business, we usually improve the design and make it cooler, and we often make it cheaper, and we often get better. We spend more money on advertising, and we launch new SKUs, and we get better quality control. So we do a lot of things. Amazon's overall principle is customer obsession. Like whatever's good for the customer is good for Amazon. Well, if we come in and we make a better customer experience, right? Well, that's good for Amazon, and therefore they like us. On the other hand, Amazon doesn't want us or anybody going in. So for example, if I sell a product to a customer on Amazon, and then in the package, let's say I sell a pair of shoes, and then in the package, I put a little insert that says, hey, in future, please come buy this from my website and I'll give you a discount, right? Amazon hates that. And if they catch you doing that, they shut down your account, right? Because they don't want you taking their customers away from them. So as long as you play by their rules, they're happy, right? And so, yeah. And so the answer is yes, they have very strong policies in place for preventing you from taking their customers away. Yep. They're pretty strict about it too. Good question.
Yeah, so another question we had submitted from someone who signed up but unfortunately wasn't able to attend today. This might be slightly harder, but do you see any role for cryptocurrencies and decentralized finance in this business, or are those two completely separate things that don't really intersect?
Well, could people look? I'm not a crypto expert. I think it's super interesting. I own a whole bunch of Bitcoin and Ethereum, right? But I'm by no means an expert in crypto. I assume it will be not, I assume, like, I think it's fairly likely that customers will be able to buy products using crypto in the future, right? So I think that's entirely possible. I also think we might be able to buy businesses using crypto. We can buy, you know, and like some customers want to do that, and there's reasons why they may want to do that. So yeah, I mean, I do think crypto will become more immersed in all areas of finance and business going forward. I expect that will be the case, unless the American government comes and cracks down really hard on everything. But even then, like, you know, they may not be able to completely squash it, right? They can do a lot to clamp down and minimize it, but I don't think they can kill it completely. So yeah, I think you're going to see more and more crypto in the marketplace.
That's definitely an interesting transformation that's going to happen sometime soon.
Sure.
So does anybody else have any questions? You can feel free to either ask out loud. Okay, yeah, Joseph.
Hi, Mr. Gnesin. I think you mentioned that you're
Hi.
from South Africa originally. Is
Yeah.
that correct? I was
Yeah.
wondering if you or Elevate Brands have thought about maybe expanding into like Jumia, perhaps. I heard it's like a e-commerce platform in Africa right now that's currently growing. I think it's pretty small still, like $1 billion market cap. Just wondering your thoughts on that.
So it's a good question. I was actually just in South Africa like a couple of weeks ago. So like the answer to that is over time, yes. It's you know, like moving to other marketplaces, yes. Today, no, right? So it goes back to the point that I had earlier, which was for us, we just have to pick our, you know, just pick our battles, right? And you know, getting set up at every new marketplace that you enter into, Walmart, Target, Etsy, like all of them require a lot of back-end infrastructure to make sure it runs efficiently. And so, you know, we start with the biggest one, then we slowly move down. And so like some of those smaller ones we will get to, I assume, in due course. It may take a year or 2 or 3, who knows, but I'm sure we'll get there eventually. Question.
Another question we got in the chat was, you know, when you're looking at other marketplaces, do you first look for international expansion, or do you look for expansion to other platforms within the same country or same, you know, region?
So both. I mean, the answer is both, right? I mean, you know, we first got started with Amazon International, so like taking it from Amazon US to Amazon Europe and Japan, and sorry, not Japan so much, but Europe, Canada, Mexico, and then that's been like the first real lever of growth, and then separate to that is other channels within the US. Yeah.
All right. Does anybody else have a question?
Yeah, I have a question.
Go ahead.
Wondering about the scalability of these Amazon brands, because I know you're saying that multiple you were buying at these companies were like a 5 times multiple, which I know like Apple's is like around 20 or so, but they can get up to around like 70% year over year growth of their revenue. And I was like curious, like how fast can these like Amazon brands grow?
Yeah, well, good question. So there's 2 things to look at. How quickly can each individual brand grow? And then how quickly can the whole portfolio grow, right? So the whole portfolio can grow quickly because of M&A. You know, there's organic growth and there's inorganic growth. Organic growth means, yeah, like we buy a business and then how much can we grow that individual business, right? Inorganic is like, how do we go through M&A? So, you know, we started this year with essentially 4 businesses and $12 million of revenue, right? And we will end this year with like $150 million of revenue. So like that completely dwarfs the growth at Amazon or any of those other firms. Like that completely dwarfs the growth of other firms, right? And primarily because we're buying through you know, mergers and acquisition, right? Does that make sense?
Yeah, thanks.
Cool. Yeah, so that's the attractiveness of our business model is you can grow through growing the brands and growing through M&A. That's the real attractiveness. And then the question is, well, from investors, like, do you eventually run out of businesses to buy? And my answer to that is no, because there's like literally hundreds of thousands of Amazon businesses for sale, right? So, you can get to $1 billion valuation with buying 50 or 60 businesses, and there's hundreds of thousands of businesses to buy. So there's no shortage of opportunity to buy businesses, right? So that's what investors are really looking for, is at what point does the growth slow down, right? At what point do you cap out?
Yeah, I think based on that, one question I have is, sure, there may be a lot of businesses out there to acquire, but isn't there a point at which, it simply gets too big to manage? Because you mentioned, with each additional company you bring on, that's a lot of effort, capital, infrastructure that you need to build. So at what point does it become too much?
Listen, it's a fantastic question, right? The answer depends on a lot of things, right? It depends on how good an operator are you. How well have you leveraged technology to help you scale and automate many of the processes, right? I mean, if every time you grow a business, you have to keep throwing new bodies at it and more people at it, it becomes difficult to manage, right? But Amazon has, more than 500,000 employees. Like, who would have thought, like, how do you manage that many people? Well, there's ways of doing it. So, I mean, in theory, we could build as many. I mean, we could get to 1,000 brands. I mean, like, it's doable, right? I mean, like, it is possible. Is it easy? No. Can we do it ourselves? Like, we'll see, right? I mean, this is, I'm saying, like, and that's why as businesses grow, there's an expression: what got you here won't get you there, right? So, like, usually to get a business like from a founder to, like, let's call it like $10 million in revenue, let's just say, I'm just using round numbers. I mean, the team that got you from there to 10 million can often be very different to the kind of people that you need from 10 million to 100 million. And then maybe you need another team to get you from 100 to 500 because the skill set changes, right? In the early stages, you need grind and you need hustle. And then, like, in the later stages, you need systems and you need processes. You need to be a little more diplomatic. You need to have, so, like, you really have to, it's very different skill sets for growing a business. And, likewise, if you want to build a business of like Amazon size with 500,000 employees plus, again, it's a completely different management team versus what I have in my team. So yeah, you just have to keep, let's say, upgrading the team as you grow the business.
Yeah, definitely. So since we are nearing the end, I think we have time for just one more question if anybody has one. So last call for any questions.
I have one question.
Go
So
ahead.
for your company, Mr. Gnesin, what makes your Amazon aggregator different from the majority of companies out there?
The answer has to do with not what you do, but how you do it. There's plenty of guys out there, and what they often do is they'll buy businesses and then they'll give it to an agency to manage, right? And we've built really strong in-house operating teams, right? And we're really good at growing these businesses post-acquisition. And we're also building really awesome, like, proprietary technology that allows us to automate some of the growth of the company, as well as help us with filtering M&A deals. Because at the end of the day, it's like, how well do you buy the assets? Like, do you buy good businesses, and then can you grow them? Like, that's all anyone cares about, right? And so, like, we've built great tech and really great systems and really great people to buy good businesses, filter the good ones from the bad ones, buy them, and then, operate them and grow them at scale.
All right, so thank you, everyone. That brings us to the end of our audience Q&A. If you do have any questions left, you can send them to me, and I'll see, if we can answer it from what was covered already. If not, hopefully, Mr. Gnesin, you'd have time to answer a few questions through email. But we'll see. Just send them over to me if you have any questions. But that does bring us to the end. If you give me just 1 second. Right. So this is just, a couple of important links, more about our organization as a whole. So we have a newsletter that talks about, whatever happened in finance in that week, right? So earlier In this event, we're talking about inflation, how there's a lot of cheap money going around thanks to the government stimulus. If you want to learn more about that, that's going to be in our weekly recap, right? Because it's a big, important piece of information that's affecting the market. So for stuff like that, you should definitely check out our newsletter. You can sign up at streetfins.substack.com. If you want to hear it rather than read it, you can go to our podcast where we bring in other great speakers to discuss many different topics in the world of finance. So that's nkfi.re, so like fire with a period in between the I and R /FS podcast. So you can check it out over there. Articles, like I mentioned before, streetfins.com, the Discord, I also mentioned that earlier, so please do check it out. And social medias, it's just at streetfins on pretty much every platform you can think of. So yeah, that does bring us to the end of our event today. Thank you very much for joining, and we hope to see you at our future events. And of course, thank you to Mr. Gnesin for taking the time out of your day to educate us all about what's a pretty interesting and growing trend.
Yeah, well, it's an absolute pleasure. Great meeting all of you guys. Some great questions there. Good luck, everybody. And, you guys can, if you guys ever want to reach out to me, Ryan@elevatebrands.com. And I'll try to get back to you guys. All right. Cool. Thanks, everybody.
All right. Thank you. Bye, guys.
Bye, guys.
Thank you.
Thank you so much.